Boom! To another weekly candle closing red here for Bitcoin. It's been a horrible 13, 14 weeks, but Fantom is showing some green in the candles. What does this mean short term and long term? We're also going to take a look at Near Protocol as well, two of the promising layer one platforms, which I'm personally looking at and keeping an eye on the price action to see when is a good chance to ladder in and add to my portfolio. Don't forget to smash on the like button. Don't forget to subscribe if you appreciate this blend between technicals and fundamentals all wrapped into a small video. Then let me know in the comments and let's get straight into the video. If you've not watched my video on Bitcoin earlier, go watch that, because as always with any altcoins, particularly in this type of market, a bear market, a suppressed bear market, we have to look to the price of Bitcoin, but it's still always important to look at the individual altcoins as well. So sitting here on Bitcoin, you can see we're closing this weekly candle now at about 19,200. We're 5 hours away from the close and it looks like another big red candle. We closed the previous week at 21,000, so now dropping another $2,000 here on Bitcoin, which is about another 10% just a week. So another horrible week. And now, you know, we're really testing the lower levels here on Bitcoin. In my video earlier, I do explain that we do have a way of potentially reaching a horrible price target of $14,500. So go watch that video to find out what would need to happen for one, us to reverse and avoid this, but two, what would need to happen for us to start thinking, okay, we could be heading to 14,000. But on a day like this, which is very interesting, Bitcoin is down 0.21, other altcoins are down. I mean, you're looking at Near Protocol, which we're going to take a look at, is down 1.68%, Solana down 2%, Avalanche down about 1%, Cardano down 1%, which is right. But I'm sitting here and seeing Fantom up 1.5%. And this is very interesting because Fantom's had quite a few days like this where it's showing something called relative strength, which is when the wider market is falling, Fantom is managing to hold up pretty well here. Now, do I think this lasts? No. Transparently, no. But it's a really good sign for us, and it's the only hopium, call it, or that we can hold on to right now, because when you've got the wider market falling, an altcoin cannot hold on to pure outperformance. You're not going to see an altcoin go on a run, particularly in a bear market like this, where it's green, while Bitcoin is red. But when you see moments like this of relative strength, it gives you a clue that, okay, this is a potentially layer one solution which people are buying the dip on. There are select days when people are adding volume into Fantom, and that is what is causing it to have a positive day on Bitcoin. In fact, let me head on over. This is the Fantom BTC chart. It's very valuable to sometimes just compare your altcoin to Bitcoin to look at the relative performance. And what I want to do is I want to zoom out, and naturally, whenever you're falling into a bear market, which is the greater fall to the downside here, right? This whole fall from slightly higher prices brings us down here. Naturally, when that happens, all altcoins will fall at a faster rate than Bitcoin. Therefore, the Bitcoin pair will be falling. But now what you're seeing is Fantom, since about the 13th of June, so nearly now 3 weeks almost, Fantom has been doing really well. It's been outperforming Bitcoin on quite a few number of days. I mean, look at the green candles there. That day. Some big outperforming days here. We did break to the downside, but now you're seeing another stronger day here, which is showing that, okay, Fantom is showing some good relative strength. Now, if we go to the Fantom USD chart, you're seeing an important support level come into it. If I head on over to the hourly chart, you'll be able to see that we're holding the 24-cent mark here on Fantom. But that doesn't mean we're out of the blue here. If you go watch my video from earlier, if Bitcoin can form its double pattern and try to get a relief rally, then Fantom and altcoins will benefit from it. But more likely, and what I'm preparing for, is a revisit of Bitcoin back down to 17,600. And in that scenario, not only are we going to reach our first price target here on Fantom of 21.20 cents, but I'm actually zooming out to look at the next price target, which brings you to the bottom of this wedge, which is down here at 19 cents. Even worse, I would be bringing out my target here at 15 cents as well. So those are the levels I'm looking out for. And those are the ones I want to keep in my mind if I want to accumulate. Those are the levels I'm looking out for here on Fantom. If I bring out the EMA ribbon, you can see on the hourly here, you can see we're slightly above our EMA ribbon, but that's too short a time scale. Let's instead look at the 4 hourly, and this is exactly what you can see. Let me just get zoomed in here. Let's take a look at this. So what you can see here is this is the positive momentum we've had here. but never fall for that pump. I have to mention this so many times. All these are just relief rallies into your EMA ribbon before the bears then push you back down to the downside. So if Bitcoin does lose the 19,000 level, I'll fully be expecting Fantom to start heading towards 21 cents here, getting rejected by this EMA ribbon. Okay, so that's the most likely scenario here. The bears are in control of the macro trend, and we have to respect that. Looking at the daily chart as well, you can see how extended we are from our EMA ribbon. We went up for a visit, we came straight back down. So now the question is, are we going to go slightly back up again before then being sent all the way back down to test those lows, which I shared with you at about 19 cents at the bottom of the wedge here. Okay, so those are the key levels I'm looking out for on Fantom. Now, what about Near Protocol? Another promising layer 1 blockchain. Very, very similar pattern. I mean, look at the daily chart here, the same thing. Ran into the EMA ribbon, got rejected now to the downside. What are the key levels we need to look out for? Well, first, let's take a look at the 4-hourly EMA ribbon, and let's get ourselves, let's zoom into there. And what you can see here is the same thing. What you're getting is a run up here from the lows into the EMA ribbon, slightly down. Run up to the EMA ribbon, now push down. So now what I want to be looking out for is, if I show you the hourly chart, the levels we want to be looking out for here on Near Protocol are, there we go, This is the pivot point you want to be watching on Near Protocol. That brings you down to $2.93. So for me, this is far more attractive point to be nibbling on something like Near Protocol than nibbling now at $3.25. Now, will Bitcoin manage to reverse from here? The overwhelming trend to me is suggesting we're going to revisit lows. There's no macroeconomic trends which are suggesting we're going to have a double bottom, reverse back to the upside, and we're never going to be back at these lows again. I think we've got a suppressed period of time where we're going to have opportunity to accumulate the dip on some of our favorites. And trust me, the layer 1 narrative is the narrative I'm focused on right now. I've said it before, I'm going to say it again. When the market recovers, if those of you have been through a bear market before, you see it operates in narratives. You have a really horrible bear market, and in those bear markets, value across the board is wiped off, but relatively Bitcoin holds up better, right? Still gets wiped, but better. Then what happens is confidence starts to come back in the market. Now, in this case, my premise is that this will only happen when the FOMC starts to talk about pauses in interest rates. And when are they going to talk about these pauses in interest rate hikes? They're going to do so when inflation is tamed, when inflation starts to show that it's going to come to the downside. If and only that, if that happens, then we can start to see equity markets rally. Then we can see confidence come back into Bitcoin. Once that confidence comes back into Bitcoin, we'll see it come into Ethereum. And then I think they're going to go into the solid layer 1 plays, because that is the battleground right now. Crypto is all about who can build the best layer 1 solutions, solve the blockchain trilemma, decentralization, scalability, security, and then attract the best dApp developers, the best talent to build amazing use cases on it. If and only if we solve that, that is where the value creation lies, and that is where you're going to see real big movements on altcoins. It's whoever can solve that layer 1 solution, because that's what adds the most value to the ecosystem right now. Now, I'm also looking at projects like Polkadot and Matic. I feel like those are really important, as well as Chainlink. Those are important projects for me, particularly something like Chainlink. I mean, if you ask any smart contract developer, they will say they cannot live without Chainlink. You turn off Chainlink, which is, by the way, the de facto data oracle play in the crypto space, so many smart contracts would just fail. So Chainlink is huge. Then you've got the likes of Matic, which is a layer 2 solution. I still think we're going to continue to need really good layer 2 solutions, even with a successful ETH 2.0, which we don't know when that's going to be launched just yet. We're still going to need good layer solutions. Okay, so guys, stay safe out there. The other thing I wanted to share with you very, very quickly is for those of you with an interest in Celsius. Celsius have apparently laid off 150 employees. That to 25% of their staff. Now, if this is the case, I know, even though it's horrible to the people who have lost their job, this is a sensible move, right? If you're trading insolvent, you need to get rid of your overheads, and every penny you can save now will hopefully be a percentage more that clients can get back in their redemption. So they should be cutting all and every single unnecessary cost. I mean, they're not serving customers right now. They should be reducing as many overheads to zero, rescuing whatever funds they can get, and giving it back to clients. It's as simple as that. Okay. Now, there's another thing in terms of the USD FUD that is going around. Be careful who you're listening to. I was listening to a few crypto influencers, which I'm not going to name. There's no need to call them out right now, but big YouTubers who I actually respect as well. I listen to their content, and based on their relationships, they're giving false advice, and you need to be careful. And what I'm saying is, this particular YouTube I'm referring to, they were backing Celsius to the rafters. They were saying, no, Celsius is going to fine. They're going to be fine. I'm leaving my money in there. Celsius is going to be fine, because they have a relationship with Alex Mahinsky. because they've had him on for a podcast and an interview. Whereas when you get a little bit of USD FUD, then suddenly they're like, no, USD is rubbish, dump your USDC. One of the best stable coins we have with the most transparency. None of them are great. I don't like any stable coin. I always say, you guys know my transparency is stay in all stable coins for as quickly as you need to, get to your fiat or get to your crypto, and don't leave huge amounts in stable coins, not worth getting the yield. But for these people to, on the one hand, say it's okay that Celsius is doing what they're doing, don't worry, you're going to be fine, leave your money in Celsius. But then on the other hand, where there's a slight bit of FUD around USDC, which is one of the best stable coins we have, it's not as bad as UST was and not as bad as Tether, right? They start spreading loads of FUD around USDC. Be careful who you're listening to and what their motives are in this space. Very, very difficult time. The best thing you can do if you're unsure is stay out of any risky plays you're in. You should be in simple things. Think of assets. In times of difficult time, you should own your keys, and that's it. They should be in your pocket. You should have your keys, and that's it. It doesn't matter what yield you're getting. You don't need to be doing some yield farming. You don't need some crazy staking somewhere. Own your keys, own your crypto, get through this bear market, and those fun times will come back thereafter. Hope you guys enjoyed this video. If you appreciate it, do smash up the like button and subscribe. As always, let me know in the comments if this type of content is useful. Go watch this video. Do check out BYBIT and BitGet, links in the description, my affiliate links, which support the channel. If you guys are looking to buy any crypto or trade, they're the two platforms which I personally use and would highly recommend. Go check them out. Go watch that video here, and I'll see you in the next one.